Welcome to Sethtra Academy, where we study the unseen strategies of those who survive every financial storm. Most investors lose money because they believe wealth is about taking risks. But the truth is, wealth is about managing chaos. Professionals don't just make profits. They protect them. And that secret weapon is called hedging, a word often misunderstood, but quietly used by every institution, hedge fund, and billionaire to stay powerful in times of panic. The rich don't predict the storm. They build umbrellas before it rains. And that's what hedging is, the silent art of protection. To hedge means to shield your portfolio against the unknown. It's not a bet. It's insurance. If you own an umbrella, you've already understood hedging. You don't carry it because you want rain. You carry it because you respect uncertainty. That's exactly how professionals think about money. They don't expect perfection. They prepare for volatility. Let me tell you a story. Centuries ago, a spice merchant from Malacca sent 3 ships on trade routes, one to India, one to China, and one to Arabia. He knew storms could destroy one or even 2 of them. But he also knew that if even one made it home, his family would prosper. He wasn't gambling, he was hedging. He divided risk across distance, direction, and time. That ancient strategy, diversification as defense, became the first form of financial hedging. So how do professionals do it today? In modern finance, hedging means creating an offset, a counterweight to your exposure. If you invest heavily in stocks, you might hedge with bonds. If you own gold, you might hedge with currency. If you trade crypto, you hedge with stable coins or opposite positions. Each hedge acts like armor. You might earn a little less during calm times, but when chaos strikes, you survive longer than everyone else. That's how professionals win the long game. There's a science to why this works. Every market moves in patterns of correlation. When one asset rises, another often falls. Professionals study these relationships and position themselves so that when one part of their portfolio is bleeding, another side gains strength. They don't try to remove risk. They transfer it, balance it, or neutralize it. That's the beauty of hedging. It doesn't stop the storm. It teaches your ship to survive the waves. Let's break down 2 common levels. First, basic hedging, which you can do personally. This includes holding cash reserves while investing, balancing local and foreign assets, or owning both gold and equities. Then there's advanced hedging, what the professionals use. This involves using options, futures, or inverse ETFs to protect against downside risk. They might short assets to counter their long positions or engage in pair trading, buying one company while shorting its rival. It sounds complex, but the philosophy is simple. Always make sure something in your portfolio is working, even when others fail. When you hedge, you trade excitement for peace. You choose predictability over panic. This is why amateurs often mock professionals for being too cautious until the crash comes. And the professionals are the ones still standing. Hedging is a test of humility. It's the admission that no one, not even the smartest trader, can predict the world. Wisdom isn't knowing what happens next. It's knowing that anything can happen. That's the core philosophy of hedging. Think about the lotus farmer in Kampong Tom. Every year he plants 2 ponds. One is exposed to direct sunlight, making the lotuses grow fast but leaving them fragile. The other is shaded, where growth is slower but more stable. When a drought hits, the sunny pond dries up. But the shaded one survives, feeding his family through the hard times. That's hedging in nature's language. 2 systems, 1 vision, survival and harmony. If you want your wealth to last for decades, build it like that farmer. So how can you start hedging today? First, diversify with intention. Don't just hold 5 of the same thing. Hold 5 things that move differently. Second, always keep liquidity. Cash is your ultimate emergency hedge. Third, use stop losses and manage your position sizing. A small loss is better than losing everything. And finally, study correlation. Know what rises when your main asset falls. Remember, protect before you profit. Safety first, wealth follows. The first rule of money isn't growth. It's protection. Because what you protect, you keep. Wealth isn't about predicting the future. It's about being prepared for it. And that's what we do here at Sethtra Academy. We study the principles that the world's calmest investors live by. If this has resonated with you, consider subscribing and joining our community. We'd love to have you. Don't fight the storm. Build the system that survives it. Join Sethtra Academy, where knowledge becomes wealth and protection becomes power. Thank you for watching.